All right, hello and welcome everyone to another weekly edition of Stock Market Mutterings. This is for the week of March 11th, where I'll do my best to try to find you guys some quality trade setups. Now, if you were watching last week, we talked about what a great week it could be and all of these nice setups, especially to the short side. And that's just exactly what we got. It just sort of lined up perfectly with a lot of these stocks entering significant pieces of resistance as well as the market itself. And then the way they got rejected was just awesome. Just awesome. And we're going to talk about that here in a second. Now, before I do get started, I do want to tell you guys that I'm doing a webinar this Wednesday. I'm going to post the link up here on the screen. It's called the One Stock, One Trade Strategy. This is a great strategy for those of you out there that are struggling to be consistent in the market or to get some sort of profit rhythm with the market. So I'm going to post the link up there. It's this Wednesday, March 13th at 5 p.m. Make sure you check it out and join us. Now, where I left last week, I was just talking about these stocks needed a rest. And it just all kind of started with the top short play that I had, which was BA fading here a good $30 down into its moving average. We talked about stocks like iRobot, it fading as well. So these stocks just really had a lot of aggressive buying, just really got steep in a lot of their technical readings, and they were due for a pullback. So we're going to talk about that here and what to kind of expect, or a few different scenarios going forward here with the market. Now, one of the things I was talking about as well was how this market not only got into the resistance, but the way that it did it. Now, if you guys out there just learning technical analysis and stuff for the first time, it does matter. To me, at least, I feel that it matters. Not just where a stock is trading, but how that stock actually got there. So one of the things that we were looking at here was how important this 282 level in the SPY was to the overall market here. And you see, this is going back all the way to October. You had a test over here in October of that. You retested that in November. At the very beginning of December, it tested that level, and that's where it really got rejected on that third go around. And that started that spiral down selling all the way to Christmas Eve. And then you had this really strong, sharp V-shaped rally right back into that number. Now, when something like that is that aggressive and bounces that strong into resistance, it almost always gets rejected to some point. And that works the other way around too. So if a stock is being sold off, or the market's being sold off aggressively, and it goes right down into a support number, a specific, or I should say an important support number, you often get a pretty violent bounce back in the other direction. That's what makes this a viable strategy to use and a viable way to look at the markets to make money. So when we were looking at this, it all really revolved around 282. And then what happened is you got that rejection early on in the week. And from that moment, you had a couple of really nice aggressive sell days. Now, this was definitely something that was overdue. I mean, we had 9 weeks of straight bullishness. The market was just strong. Every dip was getting bought. You run right 20% straight up practically into resistance. So you could expect to see, or the odds of seeing, a significant pullback are in the cards. And that's kind of what you got here. Now, I did expect it, the way things had been trading, for it to be a little slower. But again, we got the aggressive move. And on Friday, this thing just blew, which I thought was going to be support at first. I'm going to open this up for you guys to see. This little teal line right here is the 200-day moving average. I thought we would hold that up going into Friday and then staying above that. Well, no can do, because this thing just got dumped on Friday, kind of panicked down for a little bit. Now, by the time the day was over, it was able to claw its way back up almost to that 200-day moving average. So going forward, here's what we want to look at. If you start to see, let's just start talking about maybe more downside selling. If you start to see more selling as the week progresses, you don't really have anything in this chart as far as support until you get down to about this 268 level, or somewhere in that neighborhood, the lows here of the 8th. And that would be 267.83, 267.83 here to the penny. But I'd look at these lows here from the 8th. That's also very close to the 50-day moving average right here on the daily chart. So if you're looking for a zone, let's say we begin to panic out early in the morning, or you see some significant selling, you're looking for a landing zone or a potential bounce point, that would be a pretty solid number right there. Underneath of that, you got to go all the way down to the 260s into this area. But first things first, I would look for something here for a bounce. Now, I think we're going to see something a little different. I'm planning to go down there if that's necessary, but I think we're going to see more of a knee-jerk reaction bounce. I'm not saying that we're going back to the highs of a couple days ago towards this 282, but I can see a nice bounce getting back up towards the 20-day moving average here on this daily chart, which is 277s, or the 10 moving average of 270. I can see it actually getting up into this level, you know, just on a panic bounce. And who knows, maybe one last go around to try to get up into this 282. Now, on the flip side, let's say that, you know, the market does claw its way back, flags, bases, and builds. If it starts closing above 282, or we spend a lot of time up there, you'd have to start making the case for all-time highs. But one step at a time. We'll see early in the week how it does. If you're looking for a landing zone, or you see some panic and you're wondering, hey, when would this thing stop selling, I'd look down here in this area of 268s. If we start getting a little bit of strength, I'd look for resistance between 277, 278, and ultimately 282. Now, I want to look at a couple of different stock plays here. And in spite of the selling, there are quite a bit of longs. I mean, last week I felt everything was going to be to the short side, and it was. I figure starting this week, I feel like you got a lot of great long setups. And one of the long setups I like to use is when something, like I just mentioned with the markets, when something just buries itself either into resistance or support, and it just dives right into it or just explodes right into it. Those make great counter reversal move trades, and I like those. You got something here setting up on ALGN, a stock that was running pretty good, and then it just takes an extreme dive from 263 pretty much straight down every day to 228. And if you look, it's holding up the 50 moving average here on a daily. If this thing can start trading above the 232s and the 233s, I like this one for a little bit more upside. I don't know if we got enough juice to get you to 245s to go back into the gap, but I think you got some good areas to fill in here towards 240 for a nice little trade. So kind of watch that one too. Now, I was also looking at Netflix last week. I felt it had, look how messy my chart is. I'm sorry. I got a whole bunch of chicken scratch. I've obviously talked about Netflix before in the past. Let's get over here. This thing got down towards its 200 moving average and held. I kind of felt like last week, like this one was going to be the bullish one. It was going to pull like a Facebook. It didn't do it. It did not do it. And it's kind of been rolling over consistently since the 25th. It's just like slowly going down. But I expect that you see some sort of bounce out of this play. It's just, when are you going to do it? And is this 200 moving average going to hold up? The way this thing has been trading lately, at least for me, has been a little bit difficult to read. So I've just got that one kind of laying out there. Now, your big movers, like your big names that have been bullish, have kind of stayed that way. Like this Roku, man, this thing is on everyone's list, it seems. I mean, this is just a bullish stock. I mean, it took a pretty good hit there on Friday into the 10 moving average. And look, I mean, right at the open, what a buying opportunity that was for a lot of people. I wasn't one of those lots of people. I didn't do it. But man, look at that. Just dives right into there and then just snaps right back. That was the low of the day on the first 5-minute candle, 66.60s all the way up to 71. I mean, what a righteous move that is. But going forward, you kind of got, you know, a little consolidated area up here, the 72.51. You get through this 72.51. I mean, this high back here from October of 77 looks like, you know, a done deal if that happens. So keep this Roku up there. We do have overall market strength. We have some sort of nice bounces in there. I'd really take a look at this Roku. I know it's a little bit steep here on the daily. It's made a really big move, but you know, your eyes don't lie to you. They're picking this thing up on every single dip. Now, when it gets up there, if and when it gets up there, you could look at it as a short, or maybe if there's rejection off of it. But man, you want to talk about a stock that the public is wanting right now. They want to get their hands on this Roku. Same way with Shop. You know, these stocks here, there was a handful of them like Shop, like Twillo, TWLO. like Roku, these ones that have been consistently strong, stayed strong throughout the sell-off. And when they gap down, the thing that you had with Roku and Shop is when they gap down, they didn't stay down for very long. So not only did they get bought back up, but it was the manner in which they got bought back up. I mean, this thing lasted the same way as Roku. 1 5-minute candle at the open that gets extremely bought up at 181 and then closes up the day at 190. I mean, guys, that's like a $9 intraday reversal. You want to talk about stocks to trade, to put money in your pocket. I don't know what else you're looking for here. I mean, it done it before too. You look back here, had that same big old gap down flush day on the 12th, kind of drops to 161 area and then finishes up the day at 175. I mean, this thing is an animal off the dips. I'd highly watch this thing. If it gaps down 5, 8, look for a nice building spot, a nice setup, and get you some Shop. I mean, they like I said, even though the market was selling off, you got some seriously nice long setups. And here's one that just keeps delivering the goods, is this Tesla. Now, throughout the selling here in the market, this thing kind of found a bottom. You spent 4 days down here holding on to this 276 spot right down in here. And look, I know the drama that goes with this stock. You got one half of the world loves it, the other half of the world hates it. I'm just here to kind of trade this thing. That's it. And one thing I know from Tesla is the longer it sits here and builds a base, the longer it holds up, the longer it refuses to bust down through levels, this thing has a $10 to $15 rip day in it, just coming out of just because that's what Tesla does. You got a pretty strong move there and a nice close on Friday. Needs a little bit more here to sell me on that idea, or at least sell me on the idea where I'm willing to put my money on the table. But I think you see a run towards these 10 moving average and 20 moving averages, which is between 290s and 298s. Let's just say towards 300. I think you're going to see an attempt to run towards the 300 level, which was an important support for it prior to the sell-off, before you see 270, if that makes any sense. I think you're going to see a run towards 300 before you see a run towards 270. So anyway, let's see how some of these play out. Anything can happen at any time, and that's just the way market trading is. So I think as we start to move forward at the beginning of the week, we're going to see an attempt at a little piece of like a little bullish attempt. After that, we're going to decide how legitimate it is, whether it's like a 1 day off, a 2 day off, and then a re-rotation down towards lows. But I think you're going to try to see that. A market that was that strong, that resilient, and that bullish doesn't feel like it just wants to let it all go right away. But hey, it did so in December. It sure can do so in March. We're going to find out. As always, if you guys need help with your trading, take a moment, visit thelincolnlist.com. Other than that, I will chat with everyone next week. Take care. Don't forget about the webinar, and trade well.